Most people think that you either have to stare at the charts all day like a day trader or probably invest and forget it forever like a long-term investor. But what if I told you there's a sweet spot right in between? A style where you sleep peacefully and wake up richer, not because of luck but because of logic. That's swing trading, and once you understand it, you'll never look at the markets the same way again. Hello everyone, I am Pranav VK, an NISM-certified trader and trainer and your swing trading guide here at Stockshaala by Kotak Securities. And today, we are starting a brand new journey in understanding what exactly is swing trading and how you can benefit from it. If you consider day trading on one side and long-term investing on the other, balancing these two, the perfect middle spot is swing trading. Swing trading means holding a stock for a few days to a few weeks until you can get a clean move in the stock. You're not chasing every tick, but rather you're waiting for that one single swing between support and resistance. Think of it like taking a train from Bangalore to Hyderabad, but not stopping at every station like a scalper, but also not waiting for years for a bullet train of investing either. Here's a real-world example to understand this better. Imagine Infosys goes from Rs 1,300 to 1,420 rupees over 6 days. A day trader might book a small profit of Rs 10 or 15 rupees, whereas an investor might wait for even a 2,000 rupees move over a few years. But a swing trader will just book Rs 120 over the next 6 days. And he does this with patience as well as timing. That's the sweet spot, capturing around 60 to 80% of a clean move and then getting out of the market, instead of sitting glued to the screen all day long. Now I'm going to show you one simple example on a real chart. So let's head to the charts. Here I've taken the example of Mazagon Dock Shipbuilders Ltd on a one-day time frame, and as you can see, the chart is creating higher highs and higher lows. The swing trader is going to wait for a pullback, and when the moving average provides support and creates a retest, that is when he's going to enter, and his probable target is going to be at the resistance level, or if there is good momentum, then higher than that, to capture 10 to 15% profit on the capital deployed. This kind of process makes swing trading structured as well as flexible. While your entries, exits are all clear, you just have to wait for time to work for you. So here's what we have learned so far. We understood that swing trading is somewhere between long-term investment as well as day trading, wherein you're going to hold a stock for a few days to a few weeks until you get a clean swing and you book the profits. We also learned that in swing trading, we are relying on structure as well as timing, whereas you're not going to focus on luck. So start thinking like a planner and not a guesser. In the upcoming video, we'll cover why most swing traders fail and how you can be away from them. Until then, keep learning and keep growing with Stockshaala by Kotak Securities. Don't forget to share this with your friends and like this video. That's going to help us share this video with a lot more people. Thank you for watching Stockshaala by Kotak Securities. I am Pranav VK and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.